It's the age-old question. Is leasing or buying a car better? Unfortunately, there's no one-size-fits-all answer. You must evaluate your situation, future goals, and decide what you can afford. Let's look at it from both sides to give you a better understanding of your possibilities. There are a few factors you should consider when optioning a car lease. Monthly lease payments are usually lower than car loan payments because you aren't financing the full purchase price of the loan. You only pay the car's expected depreciation during the lease term. This often allows you to drive a fancier car than you'd be able to afford if you bought and financed it with an auto loan. However, you will need to make a security deposit, usually just 1 month's payment up front, but it can be higher with some leasing companies. You may need more insurance when you lease a car. Leasing companies often require more liability coverage than you need, and they may also require gap coverage to protect them if you were to total the car. Usually, you can only drive a certain number of miles according to the lease agreement. If you surpass the total allowed miles, you'll pay an excess mileage fee which adds to the cost of the lease. There can sometimes be a lot of fees involved with leasing a car. A lease is a contract, so you could get hit with an early termination fee if you end it early. Leasing companies charge this to make up for the money they plan to make on your lease agreement when you signed it. Most leasing companies charge a lease disposition fee to clean up and fix a car after turning it in at the end of the lease. The flexibility of leasing gives you the option to change cars often. When your lease expires, you turn it in and start a new lease, or often have the option to buy that same car. People who like to have the latest model and gadgets in their car prefer lease to afford new cars every few years. If you like to keep your cars for a long time, leasing isn't ideal for you. Car lease terms are usually 24 to 36 months. You turn the car in or buy out the lease at the end of the lease, but it doesn't always make financial sense to do so. If you prefer to keep cars longer than 2 or 3 years, buying may be a better option. You may save money on repairs when you lease because you'll turn the car in before it gets old enough to have a lot of trouble. Leased cars are usually under warranty, but you may still be responsible for cosmetic issues, worn out tires, or other basic issues that a warranty doesn't cover. If you own a business, you may be able to write off the lease payments as a business expense if you use your car for business. When deciding if you'd like to buy a car instead of lease, there are a few things you should think about first. You'll pay principal and interest charges monthly when you finance a car with a loan. The amount you borrow gets divided up across the loan's term, and the interest charges are added based on the interest rate the lender gives you. Loan terms can range from 2 to 7 years. The longer you borrow the money, the higher the interest charges. Auto loan lenders will require you to carry insurance and to name them on the policy. Most lenders require you to carry full coverage car insurance. Surprisingly, your insurance costs may be lower when you buy a car because you don't need gap coverage or the high liability requirements leasing companies require. You don't have to worry about any wear and tear you do to the car as far as anyone else is concerned. Unlike when you lease, you won't get charged for excessive wear and tear when you sell the car. Of course, it may decrease how much you get when you sell it and cost you more money to repair it, but no one will force you to fix it. If you buy a new car, it will likely be under warranty for a few years. Certain repairs like tires, oil changes, and new batteries are your responsibility. After the warranty expires, all repair costs fall on your lap. And the older a car gets, the more expensive its needs may become. When you buy a car, it's up to you to make sure it's in good condition. It's a good idea to have it checked out by a mechanic or trusted friend to ensure it's in good condition and doesn't have any major defects or concerns. Once you buy it, the car is yours. You can't turn it in like you can a leased car. Most people that buy cars do so for the long term. It's expensive to buy and sell cars every few years. Since cars lose 20 to 30% of their value in the first couple of years, you could be upside down within a few years if you try to sell it too soon. Any principal you pay down on your car loan becomes equity in the car. This means any amount you paid down, you own. If the car is worth $10,000 and you owe $8,000, you have $2,000 in equity. Your equity increases each month when you make payments. If you're comparing leasing or buying a new car, leasing is often cheaper in the long run. On average, you'll save $2,500 over 6 years in out-of-pocket costs, not including maintenance and repairs. But if you're considering leasing a new car or buying a used car, you'll save over $5,000 in out-of-pocket costs by buying a used car versus leasing a car. When does leasing a car make sense? You should lease a car when you know you only need the car for the short term, or you know you're the type that likes new cars every couple of years. Car leasing can also make sense if you don't drive much. Say, for example, you now work from home like millions of others and only drive 10,000 miles a year. You might save more money leasing a car versus buying one. When does buying a car make sense? You should buy a car if you like to hold on to your cars for a long time, or don't like to be told how many miles you can drive, or what wear and tear is acceptable. You'll need a down payment and must be able to afford the higher monthly payment. But you'll earn equity in the car and can sell it at any time without anyone's permission. Deciding whether you should lease or buy a car is a big decision. It's one you should consider carefully by looking at all of your factors. Look at the total cost of both options, as well as the restrictions and convenience of each option to decide which is right for you. If you like this video, then smash the like button, subscribe, and join us every week as we break down personal finance topics in plain English.